The closing bell has just rung on the New York Stock Exchange for Tuesday, March 24, 2026, and the euphoria of the Trump pump has officially evaporated. We are looking at a sea of red on the heat maps. The Dow Jones Industrial Average finished the day down 443 points, closing at 45,577. The Nasdaq Composite took a heavier hit, dropping 2% to finish at 21,647, while the S&P 500 slipped 1.1% to 6,557. What we witnessed today was the market repricing the truth. Yesterday, investors bought into the narrative of a secret peace deal, but today they were forced to confront a much grimmer reality. While the White House continues to insist that negotiations are very productive, the lack of any neutral confirmation has created a massive credibility gap. Institutional investors who sat out yesterday's rally were proven right today, as the liar's premium returned to the floor with a vengeance. We are no longer trading on hope. We are trading on a 120-hour countdown that feels increasingly like a countdown to escalation rather than de-escalation. The most alarming signal from today's session isn't the stock slide, it's the violent rebound in energy. Brent Crude, which briefly dipped toward $97 yesterday, surged back with a 3% gain today, settling at $103 per barrel. This is a clear vote of no confidence in the 5-day postponement. Physical oil traders are looking at the facts on the ground. The Strait of Hormuz remains contested, and the 82nd Airborne is currently being mobilized for deployment to the Gulf. Furthermore, the fog of war in the media has reached a fever pitch. While Ynet reports a possible call between the Iranian foreign minister and the U.S. envoy, Tehran's official state media continues to broadcast images of missile wreckage and calls the U.S. claims of peace desperate war crimes. This contradiction has sent the VIX, the market's fear gauge, back toward the 30 level. Gold is holding firm at $4,408 an ounce, confirming that safe haven demand is completely eclipsing any appetite for risk. The market is telling us that it doesn't believe the war has stopped. It believes the war is simply taking a breath before the next offensive. As we look ahead to Wednesday, we are officially entering the danger zone of this 5-day window. We are roughly 40 hours into the postponement, and the clock is ticking toward Friday's deadline. Tomorrow's session will be defined by the proof-of-life demand. If we do not see a concrete, verifiable diplomatic gesture, such as the reopening of a shipping lane or a joint statement from a mediator, the sell-off we saw today will likely intensify. Keep a very close eye on the 10-year Treasury yield, which is currently sitting at 4.35%. If that starts to climb, it means the bond market is bracing for a long-term energy shock. For your portfolio, the strategy remains defensive. Today's losers were the hope stocks, airlines and cruise lines, which gave back all of yesterday's gains as fuel cost fears returned. Tomorrow, watch the defense sector. If Northrop Grumman and Lockheed Martin start to break to new highs, it's a sign that the smart money has concluded that Friday will bring missiles, not a treaty. We are in a 120-hour window of pure manipulation. Stay liquid, stay skeptical, and don't get caught in the Friday trap.